All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Wow, that week went fast. Today is October 10th, 2025. And our top story this morning. Hey, remember we got a trade war going on? I realize everybody's kind of forgot about that because, well, you know, the metals market has been crazy, all-time highs in stocks. Oh, that's right. The entire global order of trade has been thrown into chaos, even though, you know, it's been kind of stalled since Liberation Day. Well, the Chinese woke up and chose violence this morning. They came out swinging. What do we got? First off, right off the top, antitrust investigation targeting Qualcomm. Surrounds the Qualcomm's acquisition of some Israeli company. Qualcomm has a monopoly now? Okay, that's news to me. Moving on, Qualcomm stock down a little bit on that news, but that's not all that the Chinese are going after. They're also going after U.S. ships this morning. That's adorable because, well, U.S. ships, there kind of aren't many. We don't really build ships in the United States anymore. You may have noticed, but you know what? We put a whole bunch of fees on Chinese-made ships. You say, oh, you want to bring your stuff to the United States on a Chinese boat? F you, pay me. And the Chinese are like, oh, yeah, well, we can do that too. And so they're doing that too. Now, that's interesting with the shipping thing because they're targeting U.S.-owned and U.S.-built ships. Now, with shipping, it's kind of weird. I mean, we don't build hardly any ships in this country. That's just like a no, never mind. But U.S.-owned ships, it's kind of hard to tell where a boat is from. You know, a boat might have been built over here and it might be owned by an American company, but it's flagged in the Maldives and then like all the crew is from the Philippines. So it's murky, ship ownership and who controls it. But either way, the Chinese are targeting U.S. shipping here as well. This follows yesterday's story where they added a whole bunch of new materials to the rare earths list that they have export controls on. Remember the never heard me-um and all the other stuff that they basically said you need an export license to send it to the United States yesterday. They're still with the soybean thing. They just have not bought a single soybean from the United States at all this year. Farmers are in big trouble here. So look, the Chinese, they're fighting back. We put tariffs on all their stuff and, you know, hey, they're fighting back in whatever way they can. Interestingly enough, they're also talking about this is hilarious, a customs crackdown on Nvidia chip smuggling. That's hilarious. All right. The Chinese, because they're setting up state-owned shell companies in Singapore and Malaysia in order to smuggle these chips into the country, put a pin in that. Now they're like, oh, we're going to put border agents at customs and you know, all this other stuff to try to stop those chips from coming in, even though they're the ones bringing the chips in. It's messy. I don't really know what to make of that whole, like, we're going to police Nvidia imports. It strikes me as like overtly fake, to be honest with you, like a show for the cameras. Either way, all this stuff going on, this is all leading up to a very important meeting between President Trump and Xi Jinping that is supposed to happen on the sidelines of the Asia-Pacific Cooperation Summit later this month. I believe it starts on October 27th. A face-to-face meeting between Donald Trump and Xi Jinping. There's a lot that could happen there, all right? That is a fork in the road, so to speak. We could have a big, beautiful conversation and everything could go great. You're going to love it and magic and, you know, did you get gold everywhere? Okay, sure. Or it could go the other way. And, well, we all know what lies down that road. It's a mess. That all happens later this month, only in a couple of weeks here. So, obviously, all this thing's going on here. Look, we're doing the same things. We're putting all kinds of restrictions on Chinese or exports to China of semiconductor manufacturing equipment. We're trying to tell Chinese airlines they can't fly over Russia if they want to land at U.S. airports. So, I mean, we're doing our stuff too. They're fighting back. Everybody's trying to give themselves leverage ahead of this meeting to try to come out with the best deal possible, assuming we even get one and don't just decide, you know what, we're going to have World War III instead. Let's hope we don't go that route. Now, remember when I talked about the Chinese cracking down on Nvidia chip smuggling? Yeah, that's hilarious and adorable, by the way. The New York Times reported yesterday about a company called Megaspeed. It's a kind of hilarious name. Megaspeed was spun off from a Chinese gaming company in 2023, right when the U.S. really cracked down on Chinese chips or chips sold into China, right? You may recall that was right around that time. So the Chinese create this company, Megaspeed, and now all of a sudden, Megaspeed buys $2 billion worth of Nvidia GPUs. Now, they bought them and paid for them in Singapore, and they shipped them to Malaysia, and they ended up in China. In other words, exactly what I have been saying on this channel for freaking years is what they're doing. And the New York Times reported yesterday that the Commerce Department was investigating this company. Now we got CNBC reporting this morning that Singaporean authorities are also investigating this. It's exactly what we've been saying is happening, guys. Nvidia has been illegally selling chips to China. Here is yet more proof for all you guys out there who are like, oh, there's no proof, dude. Yup, other than that steaming pile of shit with a big sign on it that says proof, there is no proof. Why don't you guys just admit that you don't mind turning a profit trading your Nvidia stock, even if it means freaking treason? Because you know the Chinese military is using this stuff. We know they're using these chips to train their drones to kill our sailors and our Marines. And why don't you just admit that you're okay with that because it makes you money? In other words, you're a low-life loser POS, and just good luck with your options. This bubble is going to burst any freaking day now. But I digress. Also on the trade war front this morning, guys, UPS, the story in CNBC that UPS is disposing of thousands of packages that are being tied up in customs, almost certainly over tariffs and a lack of documenting paperwork and fees being paid. Thousands of packages being disposed. In other words, they're throwing out your stuff. Be careful when you're shopping, guys. Check that box. If you can get ships from the USA, you are going to save yourself a lot of headache because it's possible they're just selling this stuff to you and the people selling it have no intention of paying tariffs. In other words, it's not going to get by customs. Thousands of packages just being thrown out. That's got to hit UPS earnings one way or another. We also got earnings from Applied Digital this morning. That stock is ripping. That's another data center company. They're cutting deals with CoreWeave. Oh, their revenue is up. Oh, they're still losing money. People don't care that they're losing money, even though the whole point of companies is to make money. But I digress. That stock is ripping this morning. We got 1,000 truckers were just laid off in Alabama. Montgomery Transport is a company that just went straight to Chapter 7. Do not pass go. Do not collect $200. They're out of business. 1,000 people out of work. That sucks. That's a town wrecker right there. And it looks like private equity has its fingerprints on this one as well. We've got the Bureau of Labor Statistics is calling people back to work. Hey, we might get CPI next week. We still haven't gotten that non-farm payrolls report, but the inflation data may be coming. That's encouraging. We got Levi Strauss reported earnings, the maker of blue jeans. They are saying, hey, our sales are up. We raised prices because tariffs. So they're making more money, but the stock is down this morning because of some conservative guidance that was issued by the company that disappointed investors. We got a sell-off in Japanese stocks this morning after a junior party in Japan. I'm sure I'm butchering this name, the Komeito Party. That's one of the smaller political parties in Japan. They are going to quit the ruling coalition alongside the Liberal Democratic Party over disagreements with their new candidate for prime minister, Sanai Takaichi, who earlier this week, she was announced as the new leader of the Liberal Democratic Party, and Japanese stocks went ripping on that news because she's a big stimmy proponent. Well, Japanese stocks gave back some of those gains this morning because, well, she's lost a little bit of power now. She is somewhat weakened. Probably just a negotiating tactic as they are challenging her authority now, but hey, that's going on. And, well, we've got a ceasefire in Gaza. The shooting and the killing has stopped, at least for now. Let's take the W. Let's call that a win and just hope this one lasts, I don't know, maybe 15, 20 minutes longer than the last one did. Hey, it's encouraging. Let's call it what it is. We got a lot to talk about this morning. How about we shrink my big melon of a head and let's see what's going on in the world of finance this morning. And hey, don't forget that like button, you guys. Hit that like button. And you new guys, hit that subscribe button so you can come on back tomorrow and have your coffee with the melon heads as we go through this one every single day. And right now, the S&P 500 is higher by 6 points, 0.09%, just slightly up. The Dow is up 88 points or 0.19% to the upside. And the NASDAQ is up 24 points or 0.1% higher in lieu of absolute catastrophe. Number go up. Meanwhile, we've got the DXY is pretty much unchanged from yesterday, 99.37, down about 5 basis points. Looking over at the bond market, we've got yields are falling this morning on the long end of the curve. So we got some bond buying going on here. This is interesting. The U.S. 30-year Treasury, 4.676. That's down almost 6 basis points. The 10-year yield is at 4.099. That's down 5 points and change. The 2-year is at 3.570, down almost 3 points. And the 1 month is at 4.092. That's actually up a fraction of a point here. Looking over at the commodities board, we've got metals are green this morning. Again, they're green in a big way, but you know what? They are somewhat subdued, at least compared to yesterday, which, I didn't talk about this in the opening, but yesterday, holy crap, guys. The precious metals market yesterday was all over the place. I want to give a little plug to a live stream I did last night with Bob Coleman, the CEO of Idaho Armored Vaults. That's in the feed right below this stream, guys. If you want to know what happened in the metals market yesterday, check out that impromptu live stream that we did last night. Yesterday will, I think, go down in history in the precious metals market. I'm still not entirely sure what happened, but it was a freaking mess. Things are volatile again this morning, but they're relatively tame compared to the nut house we had yesterday. So right now we've got spot gold, $3,987. That's up $11 or 0.29%. The front month December contract back over $4,000 at $4,004. That's up about $31. Silver is all over the place again. Look, here we go. $50 silver on spot there. $50.01. Up we go. Spot is up 73 cents or 1.5% higher. Now that December front month futures contract for silver, 48.25. That's interesting. So you see the spot price in London higher than the front month contract in December. Backwardation, still a thing. We are deep in backwardation here, $1.75 deep in backwardation. That's off the highs from yesterday. We were almost $3 deep in backwardation at one point yesterday. If you guys don't know, backwardation means there is a shortage of silver bars in London because the ETFs are just gobbling up all of the available metal. It is causing a mess. Be careful on leverage, guys. What's going on here? I don't know what's going on. They're changing the rules. They're jacking up margin requirements. Metals have historically not done well at this point. Silver has gotten to $50 twice before in history and been brutally slammed down. At risk of sounding cliched, I think this time is different, but just be careful. And as always, I like the shiny. We've got copper is up 0.75%. Platinum is up 0.6%. And palladium, another big move in palladium, up 3.3%. Palladium is almost pulling even with platinum here, guys. We've had a big move these last couple of days. A month or two ago, we had big moves in platinum. Now we've got palladium playing catch up here. The platinum group metals both having a ripping year here. So keep an eye on that one. Now, Bitcoin not doing quite as well. We're pretty much unchanged from yesterday, 121,729. Bitcoin had a little bit of a sell-off yesterday, but we're still hovering in this range near all-time highs between 120 and 125. Again, a leverage warning, guys. Crypto winter is just around the corner. Historically, something pretty bad happens right about now. Don't know what it's going to be, but this is when it'll happen. Be careful. Also going on this morning, this is the big one. China targets Qualcomm and U.S. ships as Xi and Trump seek leverage. China slapped new port fees on U.S. ships and started an antitrust investigation into Qualcomm, the latest in a string of tit-for-tat moves as President Xi Jinping and Donald Trump jockey for leverage before a key meeting to discuss trade and other issues. Beijing's transport ministry announced Friday that it will begin collecting fees on vessels owned by U.S. companies and individuals, as well as those built in America starting October 14th. The move coincides with the date Washington plans to impose new charges on large Chinese ships calling at U.S. ports. Separately, China's market regulator opened an anti-monopoly investigation into Qualcomm over its acquisition of Israel's Autotalks. Shares of the U.S. tech giant fell more than 4% in pre-market trading in New York following the news. The measures add to Beijing's move this week to tighten export controls on rare earths and other critical materials, as well as its ongoing halt on U.S. soybean purchases, escalating pressure on American farming communities that largely voted for Trump in 2024. Beijing's unexpected volley followed a flurry of steps by Trump's administration targeting the world's number 2 economy. Besides the planned ship levies, officials in Washington have reportedly in recent days proposed barring Chinese airlines from flying over Russia on flights to and from the U.S. and expanded sanctions to further prevent the likes of Huawei accessing restricted U.S. goods. Taken together, the latest move suggests both sides are lining up bargaining chips ahead of a leaders' meeting this month on the sidelines of the Asia-Pacific Economic Cooperation Summit in South Korea, and that begins on October 27th. So a whole bunch of things going on. They're calling these unexpected moves by the Chinese. Can we really say these were unexpected? I mean, we're punching them and they're punching us back. Does that surprise anyone? I mean, I think we should be punching them. I mean, the way they manage trade, they've been screwing us over for freaking decades. So good. But that being said, we have no right to call this unexpected. They're not just going to take it and not fight back. Meanwhile, Qualcomm shares not doing so bad here. I mean, they were saying they were down 4%. They're now down 1%, $163.97, off by about $1.70. All things considered, I think it could be worse for Qualcomm this morning. David Lee on Twitter posted this one here, summarizes it pretty well. China is busy with U.S. companies only 2 days after their national holiday. Rare earth export controls, customs crackdowns on illegal Nvidia chip smuggling, Gagne, retaliatory charges on U.S.-owned and built ships at China ports, and the Qualcomm antitrust probe. So let's talk about this customs crackdown on illegal Nvidia chip smuggling, because that's BS, guys. That's just fake. I don't know who they think they're kidding with that. Check out this one this morning. Singapore police probe Nvidia customer Megaspeed over alleged China export violations. Alleged. Yeah, okay. We all know it's happening. It's not alleged. It is just, we know it's happening. Some people are pretending it isn't because they don't mind making money off of treason. That's all it comes down to. Singapore authorities are investigating artificial intelligence computing firm Megaspeed, a customer of American AI chip maker Nvidia, for allegedly helping Chinese companies evade curbs on U.S. chip exports. The Singapore police force confirms that investigations are ongoing into Megaspeed for suspected breaches of our domestic laws, the police told CNBC in an email. The probe comes as the New York Times reported Thursday that the U.S. Commerce Department was also investigating whether Megaspeed skirted American export controls, citing anonymous officials and other people familiar with the matter. The twin investigations into Megaspeed could raise questions about NVIDIA's ability to track its chip exports effectively and to comply with U.S. restrictions on the sale of its most advanced AI chips to China. Yeah, could raise questions about NVIDIA's ability to track. That is BS, CNBC. Stop circling the wagons around NVIDIA. Stop running interference for them. It's not that NVIDIA maybe has questions about their ability to track. NVIDIA is being intentionally negligent here. They're playing stupid, turning a blind eye. They know these chips are going to the Chinese. They're helping them get there. It's not like they're like, oh, well, we swear our customers need to follow the law and we insist. But once they buy our stuff, our hands are tied. We know these are Chinese companies and we know these chips are going to China, but we're selling them anyway because we want the money. That's what NVIDIA is really telling us. The Times reported that Megaspeed, which spun off from a Chinese gaming company in 2023, bought nearly $2 billion worth of NVIDIA's most advanced products through its subsidiary in Malaysia. And again, guys, I've made videos about this. I've talked about this. There's other guys on Twitter that are talking about this. You set up a shell company in Singapore. That's where you pay for the chips, all right? And that's why NVIDIA talks about their billing location or geographic billing location on their quarterly reports. And then all of a sudden, after we ban these exports to China, suddenly NVIDIA is doing billions of dollars a month in business to Singapore, a country the size of one city. And then all of a sudden, all the shipments that used to go to China, now they're going to Malaysia because you build a Singapore, you ship to Malaysia. From there, you stop paying attention, you turn a blind eye, They end up in China. The Chinese use them to train their drones and their missiles to kill our people when they try to take over Taiwan. But you know what? Jensen Huang's getting rich over it. And for whatever reason, the financial press continues to give them a free pass. Remember, Bloomberg didn't just ignore the story about China's illegal purchases of Nvidia GPUs. Bloomberg actively ran interference by filing a copyright claim against Gamers Nexus when Gamers Nexus did a feature-length documentary on YouTube about the smuggling network for GPUs. What did they call it? One eye open, one eye closed, which is the Chinese saying for turning a blind eye. Bloomberg had that video taken down because of a 5-second clip of a Donald Trump press conference on Bloomberg TV that he used, by the way, which is totally legal according to fair use. But Bloomberg sued and got that taken down. Why would the financial press do that? Why would they actively suppress a story like that? Maybe it has something to do with the fact that they're all in the bag with this bubble and that the financial press has been actively supporting the largest accounting fraud in history. Remember, guys, don't listen to Twitter randos. It's just a conspiracy theory. Meanwhile, UPS is disposing of U.S.-bound packages over customs paperwork problem. Yo, they're just throwing out your stuff. That's messed up. And guys, be careful if you're ordering stuff online. If you can get it shipping from the U.S., get it shipping from the U.S. and save yourself a lot of headache. Thousands of U.S.-bound packages shipped by UPS are trapped at hubs across the country, unable to clear the maze of new customs requirements imposed by the Trump administration. As packages flagged for customs issues pile up in UPS warehouses, the company told NBC News it has begun disposing of some shipments. Frustrated UPS customers describe waiting for weeks and trying to make sense of scores of conflicting tracking updates from the world's largest courier. I've never seen anything like this before, said Matthew Wasserbach, brokerage manager of Express Customs Clearance, who said of the UPS backlog, it's totally unprecedented. And guys, this isn't just de minimis packages. This article goes on to mention packages worth as much as $10,000. They're just being tossed because the paperwork isn't done, the tariffs aren't paid. They're not going to spend the money to send it back to Europe or back to China. They're just throwing the stuff out. Meanwhile, we got earnings this morning from Applied Digital, and the stock is ripping here. Applied Digital beats revenue estimates as AI demand fuels data center growth. Notice they're saying revenue estimates, not earnings, because there are no earnings because data centers all lose money. Everybody is forgetting this. But hey, they're just buying the stocks anyway. Applied Digital topped Wall Street estimates for first quarter revenue on Thursday, driven by surging demand for its data center services as more customers scale up computing to support fast-growing generative AI applications. NVIDIA's customer is NVIDIA. I threw in that last part. That's just me editorializing, but I digress. Shares of the company rose 25% in pre-market trading on Friday. Let's see what we got here. Cost of revenue. Well, let's talk about the revenue growth. The company's revenue rose 84% year over year to $64.2 million for the quarter. All right, that is tremendous revenue growth, up 84% year over year. That's good, but they're not making money. Applied Digital reported an adjusted loss per share of 3 cents, smaller than analysts were expecting. They were expecting a loss of 13 cents. But last year, they only lost 1 cent. So, yeah, their revenue is up 84% year over year, but their quarterly loss has tripled. Whoops, forgot to make any money. Cost of revenues rose 144% to $55.6 million in the quarter. About $25 million of the cost was associated with building and preparing facilities for clients in the high-performance computing hosting segment. This company burns cash like everybody else in the data center business does, but data center investors don't care. Look at Applied Digital. Stock is ripping here, up 26% ahead of the opening bell, trading at $37, higher by $7. The stock is up 283% year to date. This thing is going vertical, guys. But again, the whole point is to make money, isn't it? I mean, I'm new at this. Help me out here. I'm trying to understand. Isn't the point to make money? And if you lose money forever, how do you have a company? I don't know. I guess we're going to find out. Speaking of losing money, 1,000 employees out of work as flatbed operator files for bankruptcy. Shout out to my friend Craig Fuller over at FreightWaves. who has done a pretty good job. This is 2 days in a row we're referencing something put out by Freight Waves here. It's a lot of truck drivers. And he had a tweet yesterday. We were talking about how the volume declines were way, way down. Big time declines in the number of trucks leaving a lot of the major hubs. And now we got a trucking company with 1,000 employees going out of business. Mother Trucker, a YouTube news source covering the trucking industry, has reported that Montgomery Transport LLC, a Birmingham, Alabama-based trucking company, filed for Chapter 7 bankruptcy and ceased operations effective immediately. 1,000 employees are out of work as the trucker files for bankruptcy. This is pretty important here, guys. This is not a Chapter 11. It's not a restructuring. They're not negotiating with their creditors. They're just shutting the lights off, turn everything off, sell it all. We're out of here. That's pretty severe. According to internal communications shared by employees, Montgomery Transport's financial troubles began unfolding earlier this year. In June of 2025, the company's principal owner, One Equity Partners, reportedly decided to exit the trucking industry and sell the company. By July of 2025, P&S Transportation had begun due diligence to purchase Montgomery Transport with a planned closing date of September 30th. However, on September 26th, a lawsuit and restraining order filed by Rollins Montgomery reportedly halted the sale process. So Rollins Montgomery is the minority owner. I think that's also the name of the trucking company after him. He's the guy who built the company. His private equity partners were going to sell the company, his company. He sued to block it, and now they're just going out of business. Guys, I don't know this for sure, but when I see One Equity Partners in a sentence describing when the financial troubles began, something tells me this is another case of a private equity company strip mining a business. What did they call it? Dividend recapitalization, where they borrow a whole bunch of money in order to pay themselves fake profits, and then they leave the company with the burden of that debt, and the company goes bankrupt shortly after that. It looks like that's what's happening here. I don't know that for a fact. But when I see a private equity firm involved with a bankruptcy going right to Chapter 7, they tried to sell the company, but the guy who built it sued to block it. Something tells me these PE locusts have bled this company dry. Either way, guys, that's 1,000 people out of work overnight, 1,000 families thrown into chaos, and the goods economy continues to slide into recession. But don't worry, data centers are going to save us all. Meanwhile, we got this one from Unusual Whales this morning. It's worth pointing out, guys, the Bureau of Labor Statistics is reportedly calling back some employees to produce the CPI numbers for September. That's important. We're supposed to get CPI next week. There's been a lot of questions about, because of the shutdown, are we going to get the data? We didn't get the jobs number. We were supposed to get that last week. We didn't. CPI is going to happen. At least it looks like CPI is going to happen. That's an important one. And also, Treasury Secretary Bessent is in the press. This was yesterday, and they're talking about this swap line with Argentina. The United States pretty much just bailed out Argentina, guys. We gave them $20 billion worth of dollars in exchange for $20 billion worth of pesos in order for the Argentines to use those dollars to defend their peso, to keep their government solvent. So the U.S., let's call it what it is, guys. The U.S. just bailed out Argentina. Now, Bessent is saying the U.S. Treasury has conducted 4 days of intense meetings with Minister Luis Caputo and his team in D.C. We discussed Argentina's strong economic fundamentals, including structural changes already underway that will generate significant dollar-denominated exports and foreign exchange reserves. It's worth pointing out those dollar-denominated exports, that is at the expense of U.S. farmers. The Chinese are buying a lot of soybeans from Argentina instead of buying them from us. So he's kind of like, that's a little tone deaf there. Let's just put it that way, all right? He's drawing attention to the thing that is hurting U.S. farmers as if it's a good thing. It kind of isn't. It's good for the Argentinians. It's not good for our farmers. Argentina faces a moment of acute illiquidity. The international community, including the IMF, is unified behind Argentina and its prudent fiscal strategy. It is getting better. Argentina has turned a corner big time, but only the United States can act swiftly, and act we will. To that end, today, we directly purchased Argentine pesos. Look, I got mixed feelings about this story, all right? I do not want to see the U.S. bailing out other countries. It's not our business. I don't think we should be doing it. We have our own problems, and they're doing it with currency debasement. These Forex swaps will increase the dollars in circulation, so this is going to further devalue the dollar. That being said, in my opinion, for the sake of the whole freaking civilized world, I think it is vital that Javier Milei succeed in Argentina. Argentina has shunned socialism and embraced small governments and fiscal discipline. And things in Argentina have gotten much, much better over the last 2 years since he took control, even though unemployment is up and poverty is up. Yes, when everybody in the whole country is on the government payroll, that's what happens when you cut government spending. But the Argentine economy is improving, and I think it's important that this government survives and that the Peronists and the socialists not seize control again and resume printing money and putting everybody in the poorhouse. So I have mixed feelings about this. I could go either way on the story. But that thing about the Argentine dollar-denominated exports, let's call that what it is, guys. They're celebrating something that's hurting our farmers, and our farmers are being targeted because of the trade war. It's a little tone deaf. Meanwhile, we got Levi Strauss raises prices, helping to boost profit and outlook. This is another interesting story that overlaps with the trade war here. Levi Strauss's profits are growing more than Wall Street expected, despite higher costs from tariffs, thanks to targeted price increases and a shift away from wholesalers, the company said Thursday as it reports fiscal third quarter results. During the quarter, Levi's gross margin grew 1.1 percentage points to 61.7, up from 60.6 in the year ago period, and better than the 60.7 analysts had expected. Price hikes are helping Levi's margins, but the company is also discounting less and selling more through its own website and stores instead of wholesalers, which comes at a higher margin. So Levi's raised their prices after Liberation Day, and it looks like their profit margins went up, which that borders on price gouging a little bit there, right? They're using the tariffs as an excuse to raise their prices, but their profit margins are going up, which means they raise their prices more than the tariffs. But then the CEO is like, oh, don't worry, guys, our price increases are targeted. Yes, as in we are targeting much higher profits. Either way, people are buying the jeans, and the company's doing pretty well. Now, the thing is, they released their guidance. Their guidance was a little light. I think the market wanted a bigger outlook. They're being conservative here. Whoa, yeah, talk about light guidance. The stock is down 9% now on what was a pretty good report. So the market really doesn't like that guidance here. So stock is down 9%, trading at $22.33, off by $2. Worth pointing out, guys, that this stock is already up 41.8% year to date. So a lot of optimism was already baked into the cake here. Some of that now is cooking off, if you will. We'll see where this one lands at the end of the day. Meanwhile, we've got Japanese stocks plummet after the ruling coalition collapses. This one is in Barron's. Pay attention to what's going on in Japan and pay attention to what's going on in France, guys. There's big questions about inflation and government spending and bond markets. They're up in the air right now, and those are two very important stories that are kind of happening on the sideline as we're all watching precious metals go up and up and up. I think these two might be related. Japan stocks tumbled on Friday after the coalition that has ruled for more than a quarter of a century collapsed, imperiling Sanae Takaichi's bid to become the country's first ever female prime minister. Tokyo's flagship Nikkei 225 index closed 1% lower. Meanwhile, the yen dropped 0.3% against the U.S. dollar. The move came after the Liberal Democratic Party's junior partner, Komeito, said it would quit the ruling coalition after it failed to reach an agreement with Takaichi on political finance rules. Without Komeito, the center-right LDP does not have enough votes for the parliamentary majority needed to approve Takaichi as prime minister. So this Komeito party, I don't know much about Japanese internal politics, guys, but this junior party, which the LDP needs in order to maintain the majority, they're saying, hey, we want you to change campaign finance law, and Takaichi doesn't want to do that. And so they're saying, well, then we're out of here. This is a challenge to Takaichi's authority before she takes power. Maybe it's just a negotiating tactic, or maybe it means her political career is basically over as soon as it began. But either way, Japanese stocks sold off a little bit. Here's that red candle up here, down about 1.7% right now. Now, it's also worth pointing out, look at this big gap up that we got on Monday morning after Takaichi won the the primary, if you will. She was chosen as the leader of the party. So we're selling off here about a third of those gains that we had on Monday. Not exactly a full rollback of this story, but this volatility in Japanese stocks, it bears watching, because what is at stake here is whether there's going to be more stimulus in the world's third largest economy that has the worst debt to GDP ratio in the developed world and is a failed experiment in modern monetary theory. And the question of whether or not they're going to double down on that failed experiment or not, that is what we're seeing playing out in this chart here. And last but not least, they're going to give peace a chance. All right, let's call this a win. The Israeli military said a ceasefire in Gaza took effect at 9 Greenwich Mean Time on Friday after Israel and Hamas agreed to a truce and a hostage release deal proposed by U.S. President Trump. The IDF says the ceasefire agreement came into effect at midnight. Since midnight, IDF troops began positioning themselves along the updated deployment lines in preparation for the ceasefire agreement and the return of hostages. All right, let's hope for the best here. All right, have we killed enough people? I think we all know the answer to that. Yes, but like maybe we could get like 24 to 48 hours without you guys killing each other. That would be swell. Let's see, or maybe they're just going to keep doing what they're doing. I don't know. Let's be optimistic, though. You'll forgive me for being a little doubtful of this story. Anyway, I just want to say, what happened? I just messed up my view here. What is going on here? There we go. Man, I hit a button and things happened on my screen that you guys couldn't see. Anyways, I just want to say thank you very much to Thomas Owen. Owen, you a debt of gratitude, sir. Thank you for supporting the channel. He says, massive sell orders at $51. When will this break? You know, I think we had a lot of people who were expecting a sell-off at 50, we'll say 51. And I think a lot of people probably put some limit orders in to sell when we get to that level. And that means you've got this FOMO, you've got this buying, the price goes up there, you trigger those limit orders, it sells you back down, the buyers come back in, push you up, you hit it again and again and again until you break that resistance. I think that's probably what's going to happen. Guys, we're looking at a 45-year cup and handle pattern on that silver chart. I think we can expect a little bit of sideways trading here. I don't think it would be unreasonable to expect some sideways trading or even a couple of these price slams like we saw yesterday. Nothing goes up in a straight line forever. That being said, the underlying bull case for silver and this story of portfolio reallocation, guys like Gunlock, guys like Dalio saying put 15 to 25% of your portfolio in gold, that is a huge amount of money about to flow into the precious metals market if the mainstream financial advisor types start following their lead and putting their clients into gold at that kind of allocation when historically it's been 0 to 5%. If that goes from 10 to 25%, that's a lot of money flowing into a very small market. That would make gold rip. It's going to drag silver higher. The underlying fundamentals for silver are excellent. So I do think this will break. When, guy, I'm probably the wrong guy to ask. You know, like, I mean, I could tell you the what, and I'll be right most of the time. Not all the time, but most of the time. The when, that is not my strong suit. All right. Case in point, the AI bubble. If you would have told me in 2020, what am I trying to say? If you would have told me in 2023 that this AI bubble would have ballooned to $20 trillion, I would have told you you're drunk. I would have been right. They were drunk, and the drunks bought the stocks, and here we are $20 trillion later. So the when, just not my strong suit. But I can tell you it probably will break. Thank you, Thomas. Appreciate the super chat, the support of the channel. Nacho Man, what's going on, brother? He says, so Jack, how long does backwardation last? See, also, the when is not my strong suit. I can tell you there is a fork in the road up ahead. We talked about this yesterday in that live stream with Bob Coleman, which I highly recommend. Next week, there is a big announcement, or at least we're expecting next week, an announcement of this 232 investigation into critical minerals. Are we going to put tariffs on critical minerals? Now, that is important because silver has been added to the draft critical minerals list. And the question of will there be tariffs on silver or not should be answered when that report is published. It's expected next week. It's not a hard date, but that is a very big moment. Right now, the market is positioned for there not being tariffs on silver. And if we get clarity on that, I think that will free up a lot of metal to fly back across the pond to London from New York to collect that arbitrage, and that would close that big backwardation gap. I think the answer of no, there won't be tariffs on silver would be what does that. And we expect that sometime next week. But what if there are tariffs on silver? And, I was asking that of Bob yesterday, and Bob was basically, I'm going to paraphrase here, but he said all hell breaks loose if they put tariffs on silver. So that could happen too. So how long does backwardation last? I don't know. I really don't know. But that report is going to be critical. Thank you, Nacho Man. Again, the whole when thing, not my strong suit. Thank you for supporting the channel. And thank you, Gordon Guano, who has been a Melonhead member for 9 months. Thank you for supporting the channel, Gordon. He says, when investing in Japan, I go long on Mothra. Yeah, you one of those little Japanese girls dressed in a hula skirt doing that little Mothra dance, trying to wake up the big giant moth or get the eggs to hatch? Yeah, I've seen some kaiju movies myself. All right, long Mothra. I got to be long Godzilla. Hey, pay attention to that yen carry trade, guys. We're watching the yen decline in value quite a bit here. That would suggest people are putting yen carry trades back on, not closing them out. And if that's happening, yen carry trades going back on means more money flowing into U.S. assets. That could be good for Bitcoin. That could be good for the NASDAQ and for U.S. stocks. So the weaker that yen gets, the more that carry trade gets put on. So pay attention to that. That's another reason why that Takaichi story in Japan is important. Thank you, Gordon, for supporting the channel. Hey, SWFL Bach, what's going on, sir? He says, are Florida credit unions safer than banks? That's a case-by-case basis, all right? Credit unions are governed by a totally different set of statutes than banks, which are governed by the FDIC. I forget the acronym for the FDIC over in the credit union space. I can tell you the laws are virtually identical. They're very similar. So your similar thresholds of your $250,000, not in every case, but in most cases apply. Now, are credit unions safer than banks? I don't think so. I don't think so here. Now, here, and again, this is a case by case. This depends on your credit union. But I can tell you some credit unions, they're being pushed out. They're being squeezed by the big banks because they can't compete with the marketing and they can't compete with the size. And, the deposits ran to big banks last year or in 2023 for the perceived safety of the FDIC because big banks get bailed out, little banks don't, or at least that's the perception. I think a lot of credit unions were forced to make a lot of auto loans because of that. It was the only business they could get. And so I worry about what's happening in the auto loan space and the auto ABS space. I'm not saying that credit unions did what Tricolor did or did what First Brands did or anything like that. But there's a lot of problems in auto loans right now. And I think credit unions are going to struggle there with that because a lot of credit unions are really small and it doesn't take many bad loans to fail one of these institutions. And there have been several stories over the last year of some of these really small credit unions being conserved or preserved, whatever the word is. When you hear about a credit union getting preserved, it's being taken over and bailed out pretty much by again, I forget the acronym. It's like the FDIC equivalent over there. So are they safer? It depends. Some of them are not. All right. And it sucks. I'm not saying go pull your money from a credit union and put it into a big bank. That's the worst thing that could happen for everybody. But just because it's called credit union doesn't make it any safer. It depends on the people running it in every case. Thank you, sir, for supporting the channel. Madison Hypes says, thanks for the show. Part of my morning every week. All right, Madison, thank you for being a Melonhead for 12 months. And I am delighted and honored to be part of your morning. Hey, Nashville Pasta Man says it's not a bailout. It's a goodwill impairment charge. Well, who are we bailing out here? I forget who we're talking about. But yeah, goodwill impairment charges. You got to love that because it's always the sleaziest companies that everybody hates that talks about goodwill impairment charges. Where did you get all this goodwill? Maybe you never really had it to begin with. That's one of my favorite little accounting gimmicks when money just magically disappears. They call it a goodwill impairment charge. Thank you, Pasta Man, for supporting the channel. Dmitry Maximov says, maybe I'm missing something. Maybe I am too. But thank you for the generosity, sir. He says, I help build data centers, and they make millions per month once they are energized. I'm not saying it's AI, but they do make money. No, they don't. They take in money. They get paid for their services, yes, but they pay more to provide those services than they take in. That's why they all report a quarterly loss. All of them. They lose money, right? Remember, it's not just your power cost. It's your capex. It's your interest. It's your depreciation. All right. Those are all things that you can play games with the accountants to make your company look healthier than they are. They don't make money. All right. Those GPUs, most of the data center operators right now are using a straight line 6-year depreciation cycle. In other words, they're saying my H100 that I bought in 2023, it's going to work until 2029. And every year I'm going to take 1/6 of its value as a charge against my earnings in order to offset the capital that I spent to buy that GPU. I don't think GPUs are going to last for 6 years. And actually, I think they depreciate much faster in their first 2 years of use, and then it levels off for the last 2 or 3. All right. It's not a straight line. Some cloud operators like Nebius are using a straight line 4-year depreciation cycle. It makes their quarterly numbers look a little worse, but it's more honest, and it prevents a big sudden drop in your earnings 4 years from now when you decide, oh, that's right, the 6-year depreciation was bullshit all along. Now we have to take a huge charge all at once to make up for that. That's coming for CoreWeave. Not to mention the higher power prices, which are going higher and higher and higher. That's making the profitability of these data centers worse and worse and worse. And that's also not to count the debt expenses. These companies are continuously taking on more and more debt in order to keep this silly round-tripping cycle going to inflate Nvidia's earnings, which is why companies like CoreWeave exist in the first place. That debt is getting bigger, which means that interest expense is getting bigger and bigger. No, they just don't make money. Yes, they get paid, but they pay more. That's how losing money works. Thank you, Dimitri. But they are building, they are spending, because there is a seemingly endless supply of investment capital being given to them to set on fire by building all these data centers. But they're building way too many of them. Thanks again, Dimitri, for supporting the channel. Uncle Fezster, thank you for supporting the channel. He says, my former government coworkers say they know of employees who have been sent home and waiting to see if they still have a job. I think there are probably tens, if not hundreds of thousands of people around the country who are in that position right now. They're not sure if they're going to get paid today. They're not sure if they're going to have a job come Monday. That is the nature of government shutdowns. That sucks. I can feel for those people. That being said, the federal government is not a jobs program. The federal government exists to protect our freedoms and provide basic services, not have their fingers in every pie, in every refrigerator around the country. Our government needs to shrink in size, and that, unfortunately, has profound impacts for the lives of people who work for the federal government. Let's remember, guys, there is a human cost. Austerity sucks. Thank you, Uncle Fedster, for supporting the channel. I'm going to butcher this one again. Prashant Mandare. Thank you, Prashant M. He says BLS calling back employees for CPI because the number would be low versus for NFP because we would have been a lower number. Okay, so maybe they're playing a little selective data reporting here. We didn't report the jobs numbers because we didn't like what we were going to see, but we'll go ahead and call people back for CPI because we think it's going to be low. Not a bad theory. That jives with the data I've been seeing, Prashant. That's not bad, and that is a way you can manipulate the numbers, or at least selectively report the numbers to make things look better than they are. I don't think we need one of these to say that one is plausible, Prashant. I would say you're right on the money there, brother. Thank you for supporting the channel. Chris Bott says credit unions are banks' customers. They're connected by the balance sheet. Possible. Credit unions borrowing a lot of money from banks in order to make their loans. They lend to each other. The banks do it between each other. Why wouldn't they do it with credit unions too? Entirely plausible, Chris Bott. Thank you for pointing that one out, and thank you for supporting the channel, sir. Arbitrage says DLR and EQIX are big data centers that make profit. I don't know either of those names. Are those data centers or are those Bitcoin miners? They're very similar. And are they reporting a profit because they mined Bitcoin 2 years ago and it went up 5x? That's profitable. There is a lot of overlap there. Those specific names, I don't know them though. So I can't tell you that. And by the way, when you say data center, this is also important to keep in mind, guys. There's data centers like Google's massive amounts of data sits in a data center. Netflix, when you watch a video on Netflix, it routes through a data center. Every data center doesn't automatically mean training and inferencing a large language model, which they've come to kind of like be interchangeable with. So maybe there are data centers elsewhere operating at a profit in that space. Entirely plausible. Again, I don't know those two tickers and those names, so I can't comment on them. And data center is a bigger, wider category. But most of the data centers that are being built right now are being built for high performance compute, for training and inferencing large language models. And every single one of them loses money. That is not a conspiracy theory. That is math. Thank you very much, Arbitrage, for supporting the channel. Raiden57, that's a big red one. Thank you, Raiden, for supporting the channel. I appreciate that, sir. He says, great week this week, Jack. You did deliver. Get some, sir. See you next week. Raiden, that is just a fantastic note to end the show on. Thank you so much for your generous support of the channel, as well as your kind words and good vibes. I really appreciate that, sir. Thank you so much for supporting the channel. Thank you, everybody, for supporting the channel this week. I really appreciate all those super chats, guys, as well as you, my magnanimous melon heads on YouTube and Patreon. You guys are awesome. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out for the algorithm. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.